Laura, great to see you. If tech stocks and growth stocks that you cover are pulling back at the moment, perhaps because of geopolitical tensions, is that a buying opportunity, or is it just too much broad volatility out there for other reasons that'd be a sort of false positive, false reason to buy?
Yeah, I would call it a false positive. I would prefer investors focus on things like interest rate increases, the CPI at 7%, which creates labor inflation. Those, to me, are more fundamental drivers of these stocks. And the last thing I would really encourage people is sort of don't lose sight of the forest for the trees. This metaverse thing and the value it's going to put on content assets, like IP-owned assets, is going to be huge. So lovely. I just wouldn't oversell or overbuy things until you understand how Web 3.0 affects these individual content owners.
I actually wanted to ask you, Laura, but before we dive into that, about Netflix, because I know you have not been a fan for a long time, and you often got grief for missing the huge move higher. But now that Netflix has really collapsed about 30% off the highs since earnings, are you still not touching it? You think the game has changed here?
I do think the game has changed. I think fundamental value is below where the chart says the stock will be able to trade. So we are still sitting at our underperform rating. Yeah, we put out a piece this morning called The Bear Case for Netflix. And it sort of is it's just talking about slower subscriber growth, new valuation metrics. They need to be valued on PE, which gives them huge downside compared to historically being valued on enterprise value to revenue growth, because they're no longer a growth stock. Slowing, lower ARPU. So everything is sort of not going Netflix way, in part because competition globally is getting stiffer. And boy, is Disney doing good work on adding streaming subscribers.
And to what extent will, if you're right, Netflix's decline from here be to the benefit of some of their rivals, whether traditional or streaming players going forward? Or do you think the whole market's been a bit too overheated and there's a bit too much content out there and money going and creating too much competition?
Yeah, so I definitely think that's the case. We have like 10 large competitors, some like Apple and Amazon, that never need to make money on streaming. So there's just way too much money chasing content. I expect over the next 3 years that to shake out in either acquisitions, or they're going to drive some of these companies out of business. We happen to think that unless Netflix adds an ad-driven tier, or it adds sports and adds new genres like sports and news, which we think are really important, or does some other things, it can't win the streaming wars, that it will be other companies like Comcast or Viacom or Amazon. I think Amazon Prime to me, is a clear winner here in the streaming war, simply because it never needs to make money from streaming, and it can bundle with a lot of other services. So, I think it's tough. Netflix's strategic position right now is tough from my point of view.